What if I told you that the US economy in 2024 is unlike any we've seen in previous years? That's right, the landscape has shifted dramatically, and we're here to delve into the intricate details. First off, let's talk about the gross domestic product, or GDP. It's an essential measure of economic health, representing the total value of all goods and services produced over a specific time period. In 2024, the GDP has been on a roller coaster ride, with some quarters showing robust growth, while others have seen a slight contraction. It's a dance of expansion and retraction, reflecting the dynamic nature of our modern economy. Unemployment rates, a key indicator of labor market health, have also had their share of ups and downs. Some sectors have seen a surge in job creation, while others have struggled. Yet overall, the unemployment rate remains relatively low, suggesting a resilient labor market. Inflation, the rate at which the general level of prices for goods and services is rising, has been a hot topic of discussion. In 2024, it's been somewhat of a wild card, fluctuating due to various factors ranging from supply chain disruptions to changes in monetary policy. It's a delicate balance that the Federal Reserve is keenly watching. Then there's the stock market. It's been a year of bulls and bears, with some sectors soaring to new heights while others have grappled with uncertainty. Tech stocks, for instance, have been particularly volatile, reflecting the rapid pace of innovation and the ever-changing consumer preferences. And let's not forget about real estate. With historically low mortgage rates, the housing market has been buzzing. But there's more to the story. Factors such as changing work patterns and urbanization trends have led to a shift in housing demand, creating a new dynamic in the real estate market. So, an intriguing mixed bag, isn't it? But how does it compare to previous years? To understand where we are, we must look at where we've been. The US economy, a complex and nuanced entity, has experienced numerous transformations over the years. To paint a clearer picture, we'll focus on key economic indicators such as GDP, unemployment rates, inflation, and the stock market. Starting with the gross domestic product, or GDP, this is the total value of all goods and services produced by a country in a given period. Over the years, the US GDP has seen both upswings and downturns, reflecting the cyclical nature of the economy. For instance, in the early 2000s, the GDP growth rate was rather robust, driven by factors such as technological advancements and increased consumer spending. However, the financial crisis of 2008 led to a significant contraction in the GDP. Moving on to unemployment rates, they too have ebbed and flowed, influenced by various factors including economic cycles, technological changes, and policy decisions. The financial crisis of 2008, for instance, led to a sharp spike in unemployment rates. However, these rates gradually decreased in the ensuing years, reaching record lows by the end of the second decade of the 21st century. Inflation, another key indicator, measures the rate at which the general level of prices for goods and services is rising. Over the past few decades, the US has generally managed to maintain a relatively low and stable inflation rate, thanks to sound monetary policies. Lastly, the stock market, often considered a barometer of the economy, has also witnessed its fair share of ups and downs. The dot-com bubble of the late 90s and the financial crisis of 2008 are stark reminders of how volatile the market can be. Yet, despite these setbacks, the market has shown remarkable resilience, bouncing back and reaching new highs. In essence, the US economy in previous years has been characterized by periods of growth, punctuated by bouts of recession. It's a dynamic entity, continuously evolving and adapting to changes. There's a lot to unpack here. Let's delve deeper into the specifics. The stock market, a thrill ride that can make you rich or leave you reeling. Welcome to the roller coaster that is the stock market in 2024. This year, the market has been nothing short of a wild ride, full of steep climbs, dizzying drops, and unexpected turns. Compared to previous years, the stock market has certainly given us a lot to talk about. For starters, let's take a look at the Dow Jones Industrial Average. This year, it soared to new heights, only to plunge down again in a matter of weeks. It's like that heart-stopping moment at the peak of a roller coaster, right before the big drop. And just when you think the ride is over, it shoots back up again. The unpredictability is part of the thrill, isn't it? Now let's shift our focus to the Nasdaq. Tech stocks have been on a roller coaster of their own, with some significant ups and downs. The year kicked off with a bang, with tech giants leading the charge. However, as the year progressed, we saw a few unexpected twists and turns, with some stocks buckling under pressure while others remained resilient. proving that even in the face of adversity, there are always opportunities for those willing to take the risk. And let's not forget the S&P 500. This index, often considered the best single gauge of large-cap US equities, has also seen its fair share of volatility. It's been a wild ride, with the index swinging between gains and losses. But despite the turbulence, the S&P 500 has managed to hold its ground, demonstrating the enduring strength of the market. Some significant events have shaped the market this year. Trade wars, geopolitical tensions, and technological advancements have all played their part, creating a dynamic and ever-changing landscape. These events have sparked a flurry of activity, with investors constantly adjusting their strategies to stay ahead of the game. The stock market always keeps us on our toes, doesn't it? Now let's talk about another critical component of the economy. Is the real estate market a gold mine or a ticking time bomb? A question that resonates in the minds of economists, investors, and homeowners alike as we delve into the state of the real estate market in 2024. To understand where we stand, we need to take a quick look back. The real estate market has been a roller coaster ride over the past decade, with prices skyrocketing in some areas while plummeting in others. The aftermath of the housing bubble burst in 2008 lingered for years, creating a market fraught with caution and speculation. Fast forward to today, and the landscape seems to have shifted. The real estate market in 2024 is characterized by a sense of cautious optimism. Prices have stabilized in many regions, and while growth may not be as explosive as it once was, it is steady and promising. However, it's not all sunshine and rainbows. The market is grappling with an affordability crisis as prices continue to outpace wage growth. This disparity has made homeownership an elusive dream for many, especially the younger generation. On the flip side, this has led to a boom in the rental market. With homeownership out of reach for many, renting has become a more viable option, leading to an increase in demand for rental properties. Interestingly, the pandemic has also left its mark on the real estate market. The shift towards remote work has led to a surge in demand for larger homes with dedicated office spaces, and this trend shows no signs of slowing down. But what does all this mean for the future? Well, that's the million-dollar question. The real estate market is inherently unpredictable, influenced by a myriad of factors, from interest rates to demographic shifts. So is the real estate market of 2024 a gold mine or a ticking time bomb? The truth probably lies somewhere in between. Whether it's a boom or a bust, the real estate market never fails to make headlines. Now on to another significant aspect of the economy. Unemployment and inflation, the two beasts every economist wants to tame. As we find ourselves in 2024, the United States is wrestling with these twin challenges. Unemployment, for one, is a beast that's been roaring louder in recent times. After years of relatively low unemployment rates, we're seeing a shift. While it's not a catastrophic surge, the numbers are indeed creeping up. What's noteworthy is that this uptick isn't uniform across all sectors. Certain industries are feeling the pinch more than others, a clear sign of the changing economic dynamics. Now let's turn our attention to the other beast, inflation. Inflation, as we all know, is a tricky beast to handle. Too much, and it erodes the value of money. Too little, and it could stagnate economic growth. As of now, inflation in the United States is on an upward trajectory. It's higher than it has been in the past few years, but it's still within manageable bounds. This, however, doesn't mean we can afford to be complacent. The relationship between unemployment and inflation is a complex one, often described as a seesaw. When one goes up, the other tends to go down, and vice versa. But as we're seeing now, they can sometimes rise together, creating a conundrum for policymakers. So, what's driving these trends? It's a mix of several factors: global economic shifts, domestic policy decisions, and technological advancements, to name a few. These elements intertwine in intricate ways to shape the economic landscape, making it a constant challenge to keep these two beasts in check. But here's the thing about challenges. They push us to innovate, to adapt, and to find ways to tame these beasts. Economists and policymakers are continually working on strategies and tools to manage unemployment and inflation, to ensure a stable and prosperous economy. Tackling these twin challenges is a never-ending task. But now, let's move on to something that affects us all: the cost of living. Cost of living, the ultimate test of an economy's health. The cost of living, a term that sounds so simple, but encompasses so many things. From the price of a carton of milk to the monthly rent or mortgage payment, and even the cost of a college education or healthcare, it's all part of the equation that defines the quality of life for most Americans. As we look at the year 2024, there's been a noticeable shift in the cost of living compared to previous years. The needle has been moving, and it's been moving upwards. The rise isn't a sharp spike, but more of a steady climb. It's like climbing a hill rather than scaling a mountain, but it's a climb nonetheless. The reason behind this climb? A few factors. First, inflation, an unavoidable economic reality. Inflation has been nudging prices up, from groceries to gas. Then there's the matter of real estate. Prices have been on an upward trajectory, not just in hotspots like New York or San Francisco, but across the nation. And let's not forget about healthcare and education, two sectors that continue to outpace inflation year after year. But it's not all doom and gloom. Wages have been rising too, though perhaps not as fast as some would like. And technological advancements have brought down the costs in some areas. For example, the price of many consumer electronics has fallen, and online shopping has made it easier to find deals and compare prices. Is this steady climb in the cost of living a cause for concern? It depends on who you ask. Some see it as an inevitable part of economic growth, while others worry about the strain it puts on households, especially those on the lower end of the income scale. But one thing is certain. The cost of living is more than just numbers on a price tag. It's about the kind of life people can afford to live, the dreams they can dare to dream, and the opportunities they can hope to seize. The cost of living is indeed a mirror to an economy's soul. But how does it all add up? So, what does all of this mean for the US economy in 2024? Let's take a step back and tie it all together. We began our journey with a broad overview of the US economy, its strengths and weaknesses. We acknowledge the robustness of this economic leviathan, a powerhouse that continues to drive the world's financial engine, despite the hurdles and bumps along the way. We then delved into the past, examining the economic trends and patterns that have shaped the US economy over the years. We acknowledge the cyclical nature of economic events, emphasizing that periods of prosperity often alternate with downturns, painting a picture of a rollercoaster ride that is at once thrilling and terrifying. This journey through time brought us to the present year, 2024, a year of uncertainty and anticipation. We asked the burning question, boom or bust? And while we couldn't definitively answer it, we explored the factors that could push the US economy in either direction. We then turned our attention to the twin challenges facing the US economy, the threat of inflation and the increasing national debt. We discussed how these two issues, if not handled carefully, could potentially derail economic growth. We also looked at the measures being taken to mitigate these challenges, including monetary and fiscal policies. The question of affordability also came up. Can we afford the rising costs of goods and services, the increasing national debt, and the potential for economic instability? Again, there are no clear-cut answers, but we explored the implications and potential solutions to these pressing concerns. We've covered a lot of ground, but what picture does it paint for the US economy in 2024? It's a complex puzzle, to be sure. The economy is influenced by a myriad of factors, both domestic and international, and is constantly evolving. But despite the challenges and uncertainties, the US economy remains resilient, adaptable, and dynamic. It's a fascinating entity, full of complexities and contradictions. From the bustling stock market to the ever-changing real estate landscape, from the delicate balance of inflation and national debt to the promise of innovation and technological advancements, the US economy continues to be a study in contrasts. But one thing remains constant: the US economy's ability to adapt and evolve. It continues to surprise us, to challenge our assumptions, and to inspire awe at its sheer scale and complexity. And as we move forward into the rest of the 2024, we can expect more of the same. So as we wrap up our journey, we're left with a sense of cautious optimism. There are challenges, yes, but there are also opportunities. There are uncertainties, but there are also possibilities. It's clear that the US economy in 2024 is a fascinating entity, full of complexities and contradictions. But as always, it continues to evolve, adapt, and surprise us.